that type of discussion today. So we'll keep it very open and informal. So as these presenters present, please feel free to chime in if there are any areas of knowledge or expertise that you have more. Please feel free to share with the rest of us. Let's keep it pretty simple, informal, and we'll get you out of here on time for dinner. With that said, let me go ahead and introduce to you Nabil. Nabil Malik is CEO of Cryptolitics, and he has been very active with the Government Blockchain Association since almost the inception of the organization. So, and Nabil, I'll let you give background about yourself, but he does lead one of our working groups within GBA, focuses on cryptocurrency and ICO. So here's Nabil.
Thank you. I hope everybody's well. I see some familiar faces, and thank you for coming out. I know it's rainy, it's after work, and it's a Tuesday. Thank you. My name is Nabil Malik. I'm not the smartest guy in the room, and I don't intend to be, and if I am, I leave that room. But I like my presentations to be very interactive. I like to be not a classroom. This isn't economics 101 or crypto 101. This shouldn't be a classroom. It's open for questions. Feel free to stop me if you don't understand something or you want to discuss something more in detail. We'll talk about the influence of government on cryptocurrency and blockchain technology. What does that mean? I believe 2018 is the first year where the government in all sectors, in all segments, is taking a real look at blockchain technology. And we'll go over examples on what they're doing and what states are leading the path and becoming pathfinders on this journey and implementation of blockchain technology, and how are they doing it and what sets them apart. All right, state of government blockchain opportunity. So in the next decade or so, you got to remember the government's always half a decade or a decade behind the private sector. The private sector is the leader of innovation. The government implements the innovation after quite some time, and that's true, right? There's some government agencies still using DOS to this day, right? There's some military operations still running on Windows 95 because they do the job. It's working, it's doing the job, and they don't want to change. The private sector, I think, has the responsibility to help them change. Innovation is always done through the private sector. But there's one important role the government plays, right? In every country, in every county, in every state, is their regulations kind of sculpt what the technology or segment's gonna look like. For example, the United States. We are the leader of the world, right? In a sense of policy, procedures, UN, and setting the standard. The US has not banned cryptocurrency or mining or ICO. They are the leaders of the world, and they are taking a step towards implementing regulation that works for both sides. And we'll go into great detail on that as well. Which countries are leading the way, and the positive and negative impacts of cryptocurrency becoming a legitimate state-approved currency. So this is a paradigm shift, right? For a lot of people, including myself. I grew up here. My dad gave me $5 on a Friday for completing the chores. It was cash. It said United States on it. And that's my concept of money ever since I was a kid. There were no computers. There was no addresses. The concept of digital currency did not exist. Computers didn't exist. At 5 years old, I don't remember having a computer at home. So this is all relatively new for everybody. All right, government spending. So the private sector on blockchain technology is spending $80 million in 2013. 2015, it's $474 million, and 2017, it's $4.5 billion. So the attention is there. I believe to the end of 2017 was the first year, or the mid of it, where Washington Post did an article on digital currency, Wall Street Journal did an article, and every major news organization started to follow it, right? Before that, it was never mainstream. I believe end of 2017, it became mainstream. And then once it becomes mainstream, that's when every government agency says, what is everybody talking about? What is digital currency? It starts with the what. Global searches for blockchain or cryptocurrency have risen. I mean, I think the point was the breakpoint May 1st, 2014. That's when everybody started researching what it means, what it does, how it works. And from there on, it's only gone up. All right, guys, any questions so far? All right, so this is the latest news from the White House, right? So Trump, the new economic advisor says there will be tax policies for crypto investors. So what that hints is that the White House and its staff is behind digital currency, meaning they're not putting out statements like, we want to regulate it, we want to ban it, we want to stop it. They are inspiring and motivating entrepreneurship within blockchain technology and cryptocurrency. So today, I believe the IRS has gone to Coinbase, which is the biggest exchange in the country and most used. Now, we'll go into detail why. But they've gone there, they haven't shut them down, there's no subpoenas. They go there, they open their books and say, this is it, and they move on. Positive and negatives. If the US bans it today, what happens? People will stop, innovation will halt, but it'll shift to a different market, right? You can't control it, you can't tax it, you have no control over it. Here, you can go to Coinbase's or any exchange's books and say, who bought what and when, so I know. And they can do that. And Coinbase is very, very cooperative in that matter. So the new Trump's newest economic advisor, Larry Kudlow, has hinted there will be friendly tax policies for investors of cryptocurrency markets and lower capital gain tax rates and huge movement for US market. And he is very motivated to believe that he wants to keep the innovation in the United States, right? So China banned it, right? China banned it. Where did all the companies go? Anybody know?
Japan.
Japan, Hong Kong. There's one more big country doing big things with digital currency. Singapore. Singapore is huge. They have an event this year that I think this year or next year, which is supposed to be huge. So what happens is you can't stop innovation by banning it. We live in a global economy. Bitcoin, blockchain, it's all global. You just move your headquarters, right? So Bitmain, the biggest manufacturer of miners, what did they do when China banned them? They have a headquarters in California right now, they have a headquarters in Canada right now, and they're opening a headquarters in Switzerland because Switzerland's one country that publicly announced we are supporting cryptocurrency development, blockchain technology, come open your ICO here or mine here, right? And that's one of many countries doing that right now. And then we'll go on lower levels of what states are doing that because it's happening on a state level as well. And then if anybody wants a copy of this, feel free to ask me for it. I can email everybody and we're gonna review it. So one of the biggest conferences in the world that happens on technology is called G20 Summit that happened in March. And the main topic this year was cryptocurrency regulation. So countries like United States, Saudi Arabia, China, Russia, the top 20 economies that run the world, got together. They said we can't, and we'll go into detail on who said what and when it happened, but the goal was, or the main purpose was, we're not gonna ban it as a whole thing, but we do need to regulate it. So that means different things to different countries, right? So India comes out of that conference, and that's one country I'm gonna give an example of, comes out of the conference, says, yeah, we agree, but then it bans all exchanges. If you ban all exchanges, how are the people gonna get the digital currency? They can't, right? So they didn't ban it on owning it, or even, I think, trading it, but they banned exchanges and banks to work with it. So you did kind of ban it, right? You stopped it. You stopped the whole regulation. People aren't gonna stop. It's gonna go to a black market, but you are demotivating it. But we'll go into great detail. What happens is the central banks have to come into an agreement because it's anti-central bank, the whole concept of blockchain technology and cryptocurrency. So the summary was the G20 summit took place, 20 main economies of the world. One main focus and discussion of the summit was regulation on digital assets. The seriousness and importance of this topic was discussed and the impact of global market and digital assets. The main message that was taken away from the summit was, we will not ban cryptocurrency, but we will definitely regulate it, which is very beneficial news for the global market, considering China and Japan have headlines about it. So that was the message from the top 20 economies of the world. And then we go into great detail of summarizing how they said it and what they said. For example, Russia is very pro. Putin's very digital currency pro for many reasons. May they be positive or negative, but he is supportive. So one article that we wrote, which kind of caught me off guard, was that Russia is hosting the new World Cup. Putin made it mandatory for every hotel, every restaurant, and every venue to accept Bitcoin during that time. I think he hired a company called, I forgot the name of it, but it's like a BitPay. It can be implemented in anyone's computer, and all the vendors were required to sign up for it. Regulation is bound to happen, and everybody knows that, right? I know that, you know that, and let's talk about it from an IRS perspective, right? The stuff that the United States cares about. So the IRS regulation right now, so if you have stocks, E-Trade account, JP Morgan, or XYZ, the brokerage is required to send a 403B to the IRS. So you get 401(b), one copy goes to the person that owns that account, one goes to the IRS. Then you report the capital gains, short-term, long-term, it has all the details. The problem with cryptocurrency is multiple layers, right? The argument right now is, and what is implemented is, IRS only cares about cash to coin. Coin to coin, it doesn't matter. They're not caring. They don't truly care about, as of now. Their main concern is when US dollar fiat currency goes from that to a digital currency. So if you look at all the exchanges in the world right now, or that we have, most of them are coin to coin, except Coinbase, because that's where the regulation kicks in, is when you go there. So their concept right now is your basis is when you shift it over to a digital currency. Doesn't matter if it was Bitcoin, doesn't matter Litecoin, Ethereum, or XYZ. That's what, and then when you bring it back in, right, to US dollars. So say, excuse me, I bought $1,000 worth of Bitcoin. 2 weeks later, it went to 1,200, I sold it. Capital gains 200 because I transferred it back to my USD. If you don't transfer it back, you're still holding it, just like a stock. If you don't sell it, you're not paying any capital gain. There's two arguments on that side. Yes, it works now. Will it work in the future? We don't know. Because the bases currently are voluntary, unless they make every exchange run like a brokerage and have them give them the basis from USD to coin, which is bound to happen, right? Because the IRS knows, the government knows, voluntary really doesn't mean anything. You can say 10, 5, 4. Will they cross-reference it? Maybe one day, right? So they're putting all the weight on the shoulder of the consumer or the citizen, which is unfair, right? If you're trading day and night, how much are you keeping up? Or if you're trading here and there, do you remember what was the price of the Bitcoin for $1,000 that you bought on Saturday night when it was down, right? Most people don't keep track. You should, but most people don't, and the IRS realizes that. That's why every 1099, everything else has a cross-reference. IRS gets a form, and the citizen gets the form. And that will eventually happen. But the biggest argument that people are having is if you never leave the digital world, right? You go from USD to Litecoin or Bitcoin, and then with Bitcoin, you make purchases. So the goal is at that time of purchase, you're almost selling it. But you're really not selling it, you're using it. So if you never get out of the digital world, how do you pay taxes? That's one argument. And there's multiple others. What basis do you take if you're going to go into keeping track of every coin and every capital gain? Do you take it for Bitcoin? If you trade Bitcoin for Litecoin, next week your basis change. So you got multiple facets of basis. So it gets a little bit more complicated than regular stocks because you can't sell Apple for Coca-Cola, but you can do that with digital currency. Any questions, guys? So this just goes over the top 10 things that they discussed. Self-regulation is what's going on to some extent right now. Let's go to a lower level. Let's come back home to the United States. Let's talk about what states are innovating right now or taking the lead in that aspect. And one state in particular that surprises me is Louisiana. So Lafayette is proposing their very own cryptocurrency, but let's back up before they propose that, right? What are they doing right now? They have 5 bills in legislation that make trading cryptocurrency and launching an ICO legal in their state. So they registered the coin as utility coin and call it a digital asset, and the bill is, I believe they have 5 and they've already passed them. There's no other state doing what they're doing. So they went ahead and told the country, if you're launching an ICO, come work with us. We'll give you tax breaks. First of all, they have no income tax, Wyoming. Second is, if you're mining, come mine in our state. Their electricity rates are very competitive. They don't beat the rest of the country, but they are competitive. And the governor and his office is doing everything in their power to help cryptocurrency. I had a conversation with one of his members of the office. We were on a radio show together. I was like, I agree that in your state it's legal, right? I can go launch an ICO, or I can have a company where I have an exchange of Bitcoin or digital assets. But I was like, what happens when the FBI comes? He was like, well, on the federal level, we're working with them. As a state level, it is an asset. We have law behind it, and we're willing to work with them. He's like, if they want to shut you down, can they? He said, absolutely. Federal overrides state. But he said it always takes another 5 to 10 years for federal to adopt what states adopt. So he said it starts at the state, county level and rises up. He said never in history has it gone from top to bottom. He said if enough states go ahead and create laws like we did, say out of 10 or 5 join, he said the federal will eventually kick in. And they're working on launching their own cryptocurrency as well. That will be a 3 to 5 year plan. But they are truly working hard to get true innovation moved into their state. And it's happening from the governor level. All right, quick question, just a random pop quiz. There's one state right now that accepts Bitcoin as a tax payment directly. You can go to your Coinbase and send them an address and pay for your tax due is $1,000, and they'll take it. Anybody know?
Isn't it Georgia?
No.
Delaware?
No. That was good. Their tax laws are good. But anybody? It's a state where everybody goes. Everybody's probably been there at least once.
New York?
Gambling. Nevada. So Nevada, state of Nevada accepts Bitcoin as a tax payment. They were one of the first. Let me go to that article and then we'll jump back. Did I not put it in here? Hold on. I may have not.
I wonder how they deal with volatility of...
They sell it right away. If you sell it right away, just like any other, like I have friends that have implemented into their businesses, like cell phone store owners and used car dealerships. And whenever they accept it, they call me. They're like, Nabil, what should I do? I was like, I would just sell it, get your money out.
Right.
It's worth the same if you do it the same day
Right.
or the same hour, right? You can hit withdraw on Coinbase and it goes directly to your USD in your bank account. That's what they do. I mean, the only way a technology becomes truly implemented may be the internet, computer, when the masses adopt it. How do the masses adopt it? More and more retailers, vendors start using it. The concept of any currency, may it be gold, may it be fiat, or anything that revolves around it, is what you can trade it for. If you can't trade it for anything, it's worthless, right? The credibility is in the trade. So currently, who's taking Bitcoin? Name some companies, guys.
Overstock.
Perfect, yep. They're one of the first ones in 2013, along with one other huge company.
Ferrari of Dulles.
They take it, absolutely, they take it.
Microsoft.
Microsoft takes it. Funny thing, last year, end of last year, for 2 days, Microsoft stopped taking Bitcoin. It hit the headlines. Oh, there's something wrong with Bitcoin. Within 2 days, they implemented it right back again. But there's one that was one of the first companies, I think in 2012, to take it, which is one of the largest manufacturers of computers. Dell. So Dell was one of the first companies on an international level to accept Bitcoin back in 2012, when nobody even thought about it. And
Subway
then you
does
have,
too, right?
huh?
Subway.
Yeah, Subway does, and then Virgin Atlantic does. So Richard Branson, you can go around the world on his plane for Bitcoin.
When you say the Subway does and like all these, you're telling me I could go to the store right now and exchange? Like,
Yeah, so say if you had, I think last time I saw the ad for Dulles Ferrari, the Lamborghini was, I don't know, 15 point some Bitcoin. So you go there with your Coinbase account, he's going to give you his address, and you send it to him, and he's going to give you a card.
Right, but what about Subway though? Like Subway has so many independent franchises.
I think they're implementing a BitPay type of system. So you got to remember, every one of these small vendors, they say like Subway, KFC, or one of the, anybody, they're probably going to use a middle person like BitPay that takes the coin and just exchanges it. Almost like a credit card services company, right? So he's going to take the money. That's the exchanges or the service provider's choice. Does he want to keep the coin and invest and give out USD, or he wants to do it right away? Nobody can tell him as long as everybody gets their money. Overstock's been doing it. So imagine if you're Dell in 2012, right? So they have an innovator. He started from his garage building computers. And you took Bitcoin when it was at $1,000 and you kept 30% of it, right? And the rest you used for operating costs. How much more money do you have now? Right? How much you just generated that money out of thin air, right? That was just smart from you, your executives, your CEO, your CFO to say, I think this is going to be 10,000 in 3 years. We're getting it for 800 a pop right now. Let's keep 30% of it, right? Why wouldn't you do that? But I mean, those are visionaries, right? So Dell guy is a visionary. He believed in it. He bet on it, and it paid off for him in one way or another. And then I think there's a lot of companies. Oh, one of the big four accounting firms accepts it. I thought that was revolutionary. So anybody know one of the big four accounting firm accepts Bitcoin for their services payment?
PwC?
Yeah, PricewaterhouseCoopers. Yep, they announced it. I think we did an article on it about 3 months ago. And that's pretty crazy if you think about it, right? They audit the government's financials. They're one of the biggest four accounting firms in the world. All right, so another state that kind of stands out that surprised me when we wrote this article is West Virginia. It's the first state to implement mobile voting using blockchain technology. So there was an African country that implemented this. I forgot the name of it. Zimbabwe or one of them. But the state itself is saying, I don't know if they're having it built in-house or having a consulting company. They're going to create their own blockchain and have the voting system on a blockchain, right? The beauty of it is, can't be duplicated once a number is given. There's going to be no anonymous stuff left, right? There's no ballots, no paper, no IDs. I mean, it will be revolutionary if you can truly implement this. And West Virginia is probably going to be the first state to implement it as a statewide.
Question.
Yeah.
Is Virginia doing anything?
Okay, so we're a Commonwealth. You know that, right? So we're a Commonwealth, and we're probably one of the wealthiest states in the country. We adopt everything very slowly, gradually, and at the end of it. Virginia's never been known to be the innovator, right? It's always California or one of these states. I think California has great laws for it, too. Not as good as Wyoming has done, but I think they're trying to pass what Wyoming has already done. But Virginia will always be a little on the conservative side.
Boring.
But you have DC to influence us, right? So everybody knows DC pushes our, government truly pushes our economy. All right, global government. Let's go on the government level now, right? So we've talked about the international, we've talked about the states a little bit. Now let's go on to the government side. Who's doing what? The Bay is going ahead, like head forward in blockchain. I think they're going to implement blockchain technology in a lot of segments of their country. But they're always they're a lot smaller, implementation's a lot easier, and they've kind of become the Middle East's hub of business in the past decade or so. I know Georgia's doing some really good things with mining and implementation. We have a member of GBA that has a huge mining data center in Atlanta, Georgia. I think I spoke to him once. They're doing very well. And Sweden, of course, Switzerland is hands open, accepting all ICOs, telling them to come here, giving them breaks, helping them set up shop. I think I've heard even they help you find an office space for your office. And their electricity is low, and they're welcoming mining as well. Any questions, guys? All right, so GSA, so Government Services Administration. I was at a Pentagon Federal Convention a couple of months ago with Gerard, the president of GBA. There was a guy from the GSA there, one of the high-end guys. He was talking about how he did a test case study on blockchain technology, and he found funding for it, and they're going to implement it. So I think GSA is probably the organization really, really ahead of every other agency in the country, truly looking to implement blockchain technology for the services. He did a test case study for a couple of years. It was successful, and now they're going into the implementation process of things. And I know other agencies are looking for it. I believe GBA did a little training for GSA as well. Some of their executives, they did, I think, a training on digital currency and blockchain technology and how it works, what it does, how will it help them, right? So every government agency is, how can I save money, reduce contractor pay, and be, ahead of innovation. And as bad as we think our government is, I know the USPS is about 20 years ahead of every other postal system in the world. Maybe not 20 ahead of like Britain or one of the very top 5 countries, but it's very ahead. They opened up Sunday delivery for Amazon. They ship 80% of Amazon packages. They have systems. I think they hired HP to build a $1 billion sorting machine at their distribution centers. I know the CFO spoke, the chief technology has spoken to Tesla about having all their trucks run on electric. So they are pretty much ahead of it. It's just that we're a very big country with a lot of addresses, and stuff still gets lost. And that will always happen, right? We're the size of 5 countries put together in most places of the world. And just imagine the database for USPS to have every street, every address, every zip code at one place. And then GSA has some partnerships going on. I know we're heavily involved in them with GBA. Other sectors that are considering it, Homeland, we got Department of Justice, the CIA, and eventually, again, it's the common rule, right? As soon as one agency, and I think it's probably going to be the GSA, implements it successfully, everybody else follows. They want to know what they did, how they did it, and eventually they will. I know Center of Disease and Control, they're very highly involved as well into it. And then all sorts of Department of Defense, they have it. I think, I forgot the name of it, but the government has created a new sector just for blockchain technology. If they have a need, they post it on there. Let me do some research, I'll get back to you guys. But they have a special sector that's only concentrating on blockchain technology and implementing it throughout different segments of the government.
Are you talking about the Congressional Blockchain
Yeah,
Caucus?
that's it, yep. Perfect. You were at that event, right? The representative was there, the one that happened in Arlington a few months ago?
Yeah. So it was the Congress. So it was a group of congressmen who came together.
Absolutely.
And decided that they wanted to create a forum within themselves to figure out how exactly the government will regulate and understand and work with the industry leaders and not work against them on blockchain technology. So the caucus was stood up back in early 2017. So it has only been around for about a year. But they're really there to kind of help the industry leaders move forward with.
I agree. And I mean, the United States just as a whole is very supportive, but we've always been, right? So if you look at all the technology in the world, China might make all the hardware, but the innovation stays here. Microsoft, Apple, Google. The heart and soul of innovation always rises from the United States and gets implemented throughout the world. We may not build the hardware side of it, but the software is always controlled by the US, right? We own Microsoft, the #1 operating system, Apple, the best phone in the world, the whole world's crazy about. So they want to stay ahead, and if you're gonna stay ahead, you have to adopt technology before everybody else does. China banned it, innovation stopped there. It just went out of their country. They lost revenue, they lost companies, lost jobs. Imagine a company like Bitmain. If you shut them down, they probably employ a good 10 to 15,000 people minimum at their data centers. And the amount of electricity you lost for your utility company, and then it trickles down to the restaurants, the hotels, the real estate, and XYZ. U.S. Food Administration, they are thinking about launching it. They have a blockchain exploring agenda going on. So eventually, USPS, of course, they are looking into it as well. Any supply chain management, right? So blockchain truly is very successful in logistics. So IBM had a coalition with Maersk, a shipping company, international shipping company, and after implementing blockchain technology, I think their inventory time got cut by 85%, which was phenomenal, right? So companies like Nobilis, IBM's kind of been behind the curve for the past decade, but recently they're very, very involved in blockchain and AI. So they're trying to rejuvenate their company, and I think they're heavily involved in the sectors that are going to grow, like blockchain and, of course, AI, their whole Watson program.
The white paper that is produced by USPS is available publicly, so if you Google USPS blockchain white paper, it's actually really, really good.
Absolutely.
The USPS's office, OIG, Office of Investigative, whatever, what is it, General.
Yeah.
They're the ones who initiated the study on how the blockchain can be used for their supply chain management, and it's actually really, really good. So highly recommend thinking through that.
Absolutely.
Have they already stated with blockchain technology they're looking into more than others, like, or is just how they would? What does the white paper say about it? Technology
I mean, I think they're really sort of focusing on the art of possibility, like what is possible, like how it's used in the commercial sector.
But if the government was, sorry to cut you off, but if the government sector was ever like USPS, which is huge, they'll probably start their own, right? They're not gonna, I mean, because they're so massive and they'll branch out to so many sectors. Like they can have one for identity, they can have employee numbers, they can have one for logistics, they can have one. They'll probably, I think, create their own and try to have a branch system going for their entire organization because it's such a huge organization. They have employees in every city, in every country. They have, everybody's their customer, and they own something no other shipping company in the world can own. They own your mailbox, right? So it is a dictatorship on the mailbox. No other company can put anything in your mailbox except them. And then other government agencies, the health, the U.S., the Department of Treasury, Navy, and et cetera, et cetera, et cetera. Slowly everybody's gonna try to implement it in one way or another.
You haven't mentioned energy. Why not?
I'm not sure. I know they're heavily involved as well. Energy is involved at a much deeper level in the digital currency market than people truly realize, right? So I think at this point in time, cities and states are probably getting together. The ones that support it, I know, because Albany, we had a meeting with Albany about a month ago, and they're willing to cut us a deal for less than 5 cents per kilowatt. Virginia right now has 11 cents. If you go commercial, they cut it by 2. But they're not very motivated, right? There's cities that are motivated, like Wyoming right now is offering 5 cents, which is very strong. Cuts Virginia. So if you're mining in Virginia against your mining in Wyoming, your profit got split in half or increased by half because you're paying half the cost for energy. Pennsylvania is very strong in that. A friend of mine has a commercial mining data center there, a co-location facility. They gave him 6 1/4, which is very strong as well. So there's some cities and states that are truly taking an initiative. They have their own blockchain or crypto teams within the office. I know Wyoming does. Albany does, because that's who we talk to. And then there's a few, I think Washington. The state of Washington had an article we wrote on that it's becoming a mining hub. It's not cold, it's cold there. There's no sun, and electricity they can give you for cheap. If you look at it from a global perspective, there's some countries that are very heavily involved. I think Austria, it's very cold there. You don't need ACs, you don't need a cooling system. All you need is fans running to the outside, and their electricity they're offering to commercial data centers is very low. I think it's below 4 cents right now. And then there's always smaller companies, like there's always some sort of company launching that is mining in a different way. I think there was one called Hydro something. They're in Sweden. So they went to a part of Sweden where they take electricity through the water hydrogen system that the state implemented. So it cuts their cost. Austria did something like that. So there's opportunity from a global perspective if a country is hungry enough and they're a little bit risk takers, they can go on and capture markets like Switzerland is doing. They're huge. Singapore is huge in that market. So, and then on the state level, it's the same thing. If you fall down, county level is the same thing. And then if you fall below on the government side, GSA, I think, is the lead on that side as of now.
Agreed.
Yep. And I think, guys, that's it. Any other questions? Yes, sir.
One thing I wanted to add, you mentioned the ban on cryptocurrency. I know the U.S. doesn't generally ban all cryptocurrencies, right? But there was an executive order in March 19, I think Trump went out.
I think that was a joke, right?
Oh.
So his tweet at 2 a.m., I read about it.
Was it a joke?
Yes.
There's an executive...
You can't, if you're going to ban it, you're going to ban it as a whole, right? Mm-hmm. So like he sent a tweet saying that he hates Bitcoin Cash, and then what did he favor? He talked about one coin that he really liked in that tweet. Was it Tron or was it Ripple or it was one of those? One of those. He said he hates one and he loves the other. That doesn't mean anything, right? He can't ban, like, if you're gonna ban one coin, you gotta justify to every other coin why you let them exist, right? It's all or nothing. You can't pick and choose, right? It's all part of the same pie.
How about the EO to go after the Petro, though?
Yeah, there was an
Yeah, so the Petro is, okay, so if the United States is not in good standings with another country and that country launches a digital currency, of course they're not gonna, they never banned it. You can still buy Petro through an exchange in the United States.
He made it illegal for a U.S. person.
He did. So how do you justify that though? How are you gonna, okay, so say 10,000 people in the United States own it. A, how are you gonna find them? And B, what are you gonna charge them with? Right? There's no regulation around digital currency that makes it a crime. So in all 50 states of the United States right now, mining is not banned. You can plug in a miner at your home if you have the right power and the cooling system right in your basement. Second thing, trading any digital currency, there's no ban on it, right? Coinbase exists, just like Morgan Stanley or JP Morgan exist, right? Are there going to be future regulations? Yes, of course there will be. But they're not looking to ban it. And I mean, there's always going to be coins here and there that come up by countries and states. And to be honest with you, is Petro a good investment? I don't think so. I mean, not over the companies we have here, right? Would I buy Petro over Litecoin? No.
I did think it was a really interesting move to make it illegal for U.S. citizens to buy or sell Petro and tie it to the sanctions.
Yeah.
Only from the perspective of if he can, if we go down that road,
yeah,
where he starts to say if you transact Petro,
absolutely,
it's illegal. Now, what if he says when we get a Putin coin or
yeah,
we get something else?
I don't think he'll do like a Putin, but
yeah,
but it's more political than it is technology, right?
Yeah.
I think I agree with him, right? It's this: if we have sanctions on a country and they're trying to get around the sanctions by launching a digital asset or a currency, of course the U.S. is not going to like that, right? Because they're trying to find, what do you call it, a backdoor, right? That the digital asset currency is its backdoor. And I think North Korea was doing something like that, and a few other countries, but I think China will probably be the first country to launch a real currency. A, they've banned all the rest, right? And B, they're really looking into, because it would make sense for them. They have such a huge economy, and if you were going to implement it, why not control it? And that's what China's always done, right? Facebook was illegal there, YouTube is, until Mark went there and talked to them, and XYZ. But yeah, that's what it's just an opinion, not a fact.
But with that executive order, what could happen if the FBI finds that you do have a petro? Are they?
I don't think anything will happen.
That's
They'll
cool.
tell you. I mean, what would they do? Tell
They
you to
can go
sell
after
it
you
and
for-
don't do it again? I mean,
Violating
I
something.
think no, I don't know for sure, but I don't practice in this area.
Yeah.
But I will say, even without the executive order, it doesn't seem like a stretch to say that you would be.
hey, was it a
transacting with a country that's
legitimate
under sanctions.
executive order?
I mean, it's
just
on the
a
White House
tweet?
executive orders.
Or
where
was
they-
it just
they
a
listed
tweet
it,
by Trump? 2 o'clock in the
Well,
morning?
no.
It's on the White House webpage.
Oh,
where
is
all
it?
the executive orders are.
Even
Is it
without the
really?
executive
Yeah.
order, you're transacting, you're doing
Trading
business
with
with a
sanctions
sanctioned country. So I don't even think that's necessary for you to
Yeah.
be a violator.
I mean, but in all truth, I don't think Pedro is even, everybody, a lot of high-end people say that it's not the real truth. How do you justify it? Who's going to go check the oil reserves that he's backing the Pedro by? And how do you justify it?
That's what I was gonna say earlier. That a lot of people think it's just a money grab, specifically by Venezuela. I mean, they want to capitalize off this.
All right, thank you.
Okay, great.
I think we're all
Well,
set.
thank you, Nabil.
Appreciate it. Thank you, guys. And feel free to correct me if I said anything wrong.
All right. So next we have Habib here. Habib, I'll let him introduce himself, but he is a member of GBA, and he leads up one of our working groups. I'll let you get more into that as well, but he is an attorney practicing in the field of advising ICOs and cryptocurrency. So here's Habib.
So just a quick intro. I'm a corporate and securities attorney. Recently that's meant advising crypto and blockchain companies. That includes cryptocurrency funds, ICO, people looking to do ICOs, mining companies, etc. So the full range. It's an interesting group of people to work with. Now, working group with GBA, still in very early stages, but if some of you are interested in getting involved with that, definitely let me know. I'd love to talk with you. So, quick show of hands, how many of you have at least some background as to what cryptocurrency is? Okay, so I'm going to pass over this mostly, all right? We're all familiar with what cryptocurrency is. I will say it's important to separate cryptocurrency and blockchain, right? Blockchain can easily exist without cryptocurrency. Cryptocurrency happens to be the way people with blockchain companies can get rich, I think. Yes. I know that's
I
not
humbly disagree, right? So blockchain technology wouldn't be as big as it is if it wasn't for Bitcoin, right? So Bitcoin was the vehicle that shined light on blockchain technology. Would blockchain technology be where it is today without Bitcoin being where it is today?
completely agree, but blockchain technology would have gotten there in the end anyways. It's revolutionary enough that AI didn't need that sort of vehicle. I don't think blockchain does either. That being said, cryptocurrency is now almost inextricably tied in with blockchain and blockchain companies because that's how they see they can get money. Not to be too cynical about the whole thing. So we'll skip over this. Cryptocurrencies, very simple. How many of you have experience trading cryptocurrencies? All right, a good amount. I myself have, and this will give you shed some light on my views. I've not been a believer in cryptocurrencies. I still could not tell you why Bitcoin went up the way it did. I think anyone would have trouble telling you why, right? There's obviously the popularity of blockchain and the rise of the whole ecosystem, but there's a lot there that's unexplored. So where do cryptocurrencies come from? You have blockchains like Ethereum, on which people will build their coins, build their apps. Others will also build their own blockchains. Like I said, very quickly, shooting over this, this shows stats for 2017, 2018. You've had anywhere from $3 to $4 billion in ICOs as well so far. So despite the drop in prices that was experienced at the end of last year, you're still seeing a good amount of activity in the ICO space. Why are they important? So Nabil did highlight this a little bit. The main issue here, and I'll say this from the way the SEC looks at it, is capital formation, right? If you are someone with an idea, what can you do? In the traditional startup space, You go out looking for angel investors, then maybe you look for VCs. It's all a very complicated system. It's about who you know. It's very different. My view of where ICOs come out of, if you look to something like Kickstarter, which sought to turn the whole thing on its head. We're not looking at going to VCs or traditional funds or anything like that anymore for funding. We're looking to sell our product, right? We're going to advertise to the public, this is what we're looking to build. Why don't you help us build it? And these Kickstarter projects would just pre-sell their items. ICOs, in my opinion, come from a very similar standpoint, right? They're saying, look, here are our tokens. We're going to be building out this app, or we have maybe already built out this application. With our tokens, you can use it. Very similar to what a Kickstarter campaign does. But there's a lot of legal structure in the background that makes it very different. I think the Kickstarter type model is something, though, that ICOs could look to adopt in the future, and happy to talk about that more. So, global adoption, I think Nabil went over a lot of this pretty well. In the last year or so, you've seen cryptocurrencies boom, right? My own firm started taking cryptocurrencies just this year. As Nabil mentioned, you had Dell, Microsoft, Virgin Atlantic. I did not know these companies were taking cryptocurrencies.
Don't forget about Ferrari.
And Ferrari, right. If I had invested, instead of being a spoil sport, maybe I could have gotten a Ferrari by now. All right, economic impact. It's a little early to talk about the economic impact of cryptocurrencies at this point. I will say the idea of blockchain and centrally banked blockchain currencies is very interesting. Nabil mentioned he thinks China will be the first. I would tend to agree, because what is more Big Brother than a centrally banked currency on a blockchain? To be able to track every single transaction, to see the entire history, to be able to tax everything, that's pretty scary, right? A lot of us think right now of blockchain and cryptocurrencies as this tool that's kind of used in the dark, right? A lot of non-state actors are able to use cryptocurrencies to transact business. Once you're looking at governments being able to look at the blockchain, though, that's the complete opposite situation, right? And something that maybe we should be a little hesitant about or scared of. All right, members of the cryptocurrency system. So really, my presentation kicks off here. I'm going to introduce a few different players. So you have the token creators. These are generally blockchain companies, right? They have some sort of innovation. They're looking to fund themselves, and so they go around creating their cryptocurrency. There's a more complicated structure in the background, which I'm happy to go over, as to how these companies are able to structure their ICOs to avoid millions of dollars in taxes and get around traditional hurdles to funding. Then you have exchanges. So it's important here to distinguish, most of you are familiar with the New York Stock Exchange. Cryptocurrency exchanges are not the same, right? New York Stock Exchange is registered with the SEC. Cryptocurrency exchanges are generally registered and governed by FinCEN and MSB laws, money service business laws. Wallets, fairly self-explanatory. Sellers and buyers, you obviously have a lot of people transacting in cryptocurrencies in this ecosystem, legislators and regulators. So legislation is sort of the slow aspect of this, right? You're likely not going to see legislation in the blockchain space come out for a while at the federal level. What you are seeing is action from regulators, though, right? How many of you were able to watch the chairman of the SEC and at CFTC talk about blockchain?
Catched it a little bit.
So, I mean, it was interesting to see, and I'll go into the difference between the CFTC and SEC in a second. But these are the players that are making the rules for this now, right? And even at the regulatory level, there's a couple of different ways this is done. As a regulator, you could issue actual regulations. Again, that's sort of, if legislatures are the slowest, Regulations would fall somewhere in between. What you're seeing, a lot of the rules in this space being made from now, though, are enforcement actions, right, or administrative guidances. FinCEN issued an administrative guidance in 2013 that clarified how it was going to use virtual currencies. The SEC has yet to do that, but you've seen several subpoenas, you've seen lawsuits, and as you go through these, you look at orders like the Dow order back in July, or the Munchie order at the end of 2017, you get an idea of how these regulators are viewing cryptocurrencies.
I was just going to say, would you put enforcement beside regulators?
Yes, that's a good point. So that second part that I was talking about there, regulators are making rules, but they're also enforcing. And then, I guess as a subset of enforcement, it's not really enforcement by regulators, but you're seeing civil lawsuits as well, right? You have these investors that were defrauded of money that are going out and suing companies, and laws being made in that space as well. I would say that's where it gets a little more messy, right? Where you have enforcement actions from regulators, you have at least a central view of things where there's policy in mind. When you're looking at all these civil actions in different counties, different states, federal versus state, etc., every judge is looking at this from their own point of view.
I was just going to say, the only thing I would add to that would be throwing law enforcement, almost as a third category because of the way that they prosecute cases and how they look at cryptocurrencies and as they're going after these exchanges, where it's not quite legislative, it's not quite regulatory, but it's that third. You never know what these guys are going to do.
Definitely. I think that's important to state. And at least, though, I would say I would put them a little closer to regulators in that they have a view of things, I think, right? There's orders coming down from the top. This is how we're gonna view this. So cryptocurrency uses. Let's say I go out, I mine some Bitcoin. What can I do with it? Nowadays, apparently I can buy a Ferrari, I could get a plane ticket, I could do quite a bit. Generally, though, the whole concept behind cryptocurrencies and why they claim they're not, they shouldn't be regulated as normal, is that they are tokens meant to be used on a specific platform, right? I mentioned the whole Kickstarter model Kickstarter lens through which I view ICOs. I buy Ether ideally to use on Ethereum, right? Very simple concept. However, nowadays, you have enough of a thriving ecosystem that it's become an investment asset. All right, characteristics. I'll let you guys take a quick look here. So it has become more of an asset, like I said. So, it's a medium of exchange, storing value, and all these characteristics play into the question of who gets to regulate this, right? As a medium of exchange, should FinCEN be looking at this? If it stores value and it's an asset or it's an investment, does the SEC come into play, and how does the IRS tax this? Capital formation. So I mentioned this has been the main benefit of cryptocurrencies for blockchain companies, right? Capital formation, just for those of you who are unfamiliar with the term, it's just fundraising, right? If you're a company in the US today, you have a few different ways to raise money, right? Generally, it's either equity or debt. Debt's pretty hard to do for a startup, right? You're gonna have a hard time going to the bank, telling them you need $5 million to build out your blockchain platform. They're gonna have a lot of questions, right? Who might be more open to this? A forward-thinking VC, right? Or an angel. But those are hard to get access to. So people in the ICO space thought, why not democratize this, right? Let's take our idea straight to the people. Now, this comes with some problems because unlike many of you in this room, people tend to, I won't say be stupid, but they tend to be ignorant in a lot of cases, right? That's why the SEC comes in and says, look, there's rules to how you can market to the public and how much money you can get from the public.
But the rules exist to control, right?
Right.
The biggest problem SEC has with ICOs is it's becoming uncontrollable. Like in 2018, the first quarter funding for ICOs surpassed $5 billion. That was the cumulative of entire last year.
Right, but why does the SEC seek to control, right? That's what we're getting at.
Protect the consumer.
Exactly, protect the consumer. I think enough of us here are in business, right? We're not in Silicon Valley where that line might get me killed after I walk into the parking lot. But really, that's the point of this, right? These rules and regulations were put into place to prevent, how many of you seen Wolf of Wall Street?
Of course.
Right? That kind of behavior. And to be frank, you see some of that kind of behavior in the ICO space.
But it's happened in every market, in every segment, right? What was the real estate bubble burst? Millions of people lost money. Who made money? The banks did, right? So who got punished? The end consumer did. Even in that scenario, right? The banks didn't go out of business.
Definitely.
I mean, the VCs didn't lose their money, right?
So I don't want to say that I don't advocate. I'm not going to say that I do advocate either, so I'm being recorded right now, for regulation of banks or financial institutions. But that doesn't mean that you should let a whole other class of people come in and, abuse the consumer.
I think the biggest thing with ICOs right now that has caused so much pain, and it's funny to watch John Oliver talk about that, is one is you have people put out a white paper, have no technical beat in it, and then disappear. And I think that's the reason why there
I
were
agree.
regulations. It's not that I think that government should stymie it. I don't think that is. I just think that you do need to have consumer protection of some sort, and at least some good stance, because right now you've got multiple agencies saying different, declaring these as different things. One saying it's security, the other one saying it's property, the other one saying it's currency, and it's really confusing.
Very well put. And I will go into that because I agree it can get very confusing, and we'll definitely get more clarity, I think, within the next year or so. At the same time, the area is very again, I say this as a lawyer, the area can be navigated, right? All right. Utility tokens. All right. So let's talk about the SEC. I mentioned where the SEC comes from. Ideally, some of you can sympathize with them, right? They're just trying to protect them. Normally, if you are a startup and you want to raise money, again, debt or equity. When you're looking at equity, nowadays there are even options for you to go to the public, right? There's crowdfunding sites where you as an investor can put some money in to a startup. There are restrictions though, right? Whether or not you're an accredited investor, how much can be raised, etc. All these things are very important though, right? You don't want a startup to be able to go advertise to the public, raise $100 million, and cheat everyone out of to go out and raise from the public. But they've restricted it to, say, accredited investors, right? Or if you're taking non-accredited investors, they don't allow you to solicit funds, right? You could go to your friend and say, look, I know you're not an accredited investor, but I got this opportunity. Jump on it. That's allowed. These are common sense rules, to me, again.
Quick.
Yes?
So, from a legal standpoint, what are some of the restrictions that it's being put in place to protect consumers in the ICO space right now that you know of? I mean, can you give us like specific examples that, like in the case of crowdfunding, you have to be meet a certain criteria to invest. What are some of the things that are in place right now?
So the main tool put in place right now, and actually before I get into this, let me give you an overall, right? What was your name, ma'am? June. So as June mentioned, there's a lot of different players in this space, right? I'm going to name a couple of the big ones. You have FinCEN, right? Financial Crimes Enforcement Network. You have the SEC, and then you have the CFTC, right? CFTC, just as a matter of fact, has authority over all tokens, all cryptocurrencies. Every single cryptocurrency is considered a commodity. But their authority is limited. So if any of these cryptocurrencies or commodities
the people running these engage in fraud, then the CFTC can jump in. But unless you do something special with that commodity to make it a future or an option or something to that extent, then the more complicated regulations of the CFTC don't apply, right? So there's plenty that fall into that space. So all cryptocurrencies can be pursued by the CFTC generally, but that doesn't mean they have to have a lot to worry about as long as they're not fraudulent, right? And you can do a lot of stuff without being fraudulent, right? You can raise $100 million with a white paper and be hammering it out for the next 10 years without being fraudulent. So, the next step, the SEC, right? That is the main enforcement body, I think, that will be protecting consumers going forward. FinCEN is important, but that's more from a government regulatory perspective, right? What is the SEC doing? Right here. The question becomes, are you a utility token or are you a security? And the SEC has started looking at factors that sort of look back to its main purpose, protecting investors, right?
Whenever you get a chance.
Yes.
So I was at a convention recently, last weekend. They were talking about, and one of the other CEOs and I were talking to, they were talking about how you can have a digital currency, make it into a security, and launch it on a regular exchange, like NYSE or NASDAQ. Is that possible?
It is possible. I'll get into that. That's sort of an advanced,
advanced
place to go. But the SEC has started, going back to the utility token question, the SEC has kind of gone back to its roots, right? What are we doing? We're trying to protect consumers. All right, so in what situations should we say a token is a security? Now, if any of you saw the testimony that Commissioner Clayton gave, a lot, and the guidance that he later published, a lot of this has to do, and what he focused on, was whether or not the ICO was happening before or after a platform was built, right? That becomes important.
I have a question. What's the difference between utility tokens and coupons? Coupons are also the exchange of money, and that is actually, I think, like the 6th largest exchange of financial markets. A lot of people don't realize that. So what's the difference between utility and coupons?
That is an interesting question. They might even be the same technically. So the idea is that a utility token is not going to be regulated, right? Coupons, I don't think are generally regulated either. I might be wrong on that.
It's defined.
Yeah.
But that's I believe, that's a contractual arrangement, right, between the company and the person holding the coupon.
But the reason why I know about it is there used to be a company up the road from me that handled, they were like the 4th or 5th, and they were talking about fraud in coupons because people would print it off and do that for reimbursement. And it reminds me of this.
So we're going to, hopefully that answers your question. I think both are just not regulated by the SEC in that case, and maybe they're very similar then. So the practical application that the SEC, the way the SEC has chosen to practically apply whether or not something is a security is the Howey test, right? How many of you are familiar with the Howey test? So, two very simple questions, right? Is money being invested in a common enterprise, and are you expecting a return based on the efforts of others? So I'll knock out a few of these right away, right? Generally in an ICO, money is being invested, right? Even if that's property being invested or virtual currency being invested, that factor is met. You're also generally investing in a common enterprise, right? This is not an isolated asset. It's very much tied to a system that's being built, tied to what other investors are doing as well. The key then becomes, is there another person on whom you're relying? And that's why the SEC, I mentioned, has started focusing on the idea of, is the raise being done pre the platform being built out or post, right? If you have a product in hand and you're going to people and selling it, it's a lot less shady, right?
I agree. Absolutely.
Great. So that was one point on which we
I agree.
agree. That's important. If both of us are agreeing, there's something there. On the other hand, if you already have if you don't have a product built out, you're going around raising money, you're asking for $100 million to build something out, people are really investing in you, right? Then you're looking at more of the traditional startup type relationship where people are essentially buying equity. And one thing I want to make clear here, the SEC doesn't only govern stocks, right? That's something that people sometimes misinterpret. The SEC is not saying cryptocurrencies are stocks, but they also govern a whole bunch of other things that are considered securities, right? One of these is called the investment contract. The Howey test happens to be the test to determine whether or not something is an investment contract. Investment contract happens to be the catch-all in which the SEC can sort of say, no, we think our jurisdiction applies here, investment contract, right? Not that simple, but they use the Howey
What is
test.
the SEC limited to? Anything? I mean, anything to do with business or money they can get involved? Or are they limited?
They're limited to securities. But securities is a large definition.
Yeah, I mean...
Right? So there's some very specific things, right? Like notes or equity that are considered securities. Most of the list is pretty specific. Again, the one place where it gets broad is the investment contract. And that's where the SEC is trying to say, look, these cryptocurrencies are investment contracts. And that's where the Howey test comes in. The Howey test will tell you whether or not something is an investment contract.
And just to be clear, you're saying if it's pre-platform built, that's a security. Post-platform, then you can say it's a utility?
Evidence of a security versus evidence of a utility. Okay. So it's still important what you're doing, right? For example, I'll get a little bit in depth here. How many of you are familiar with the Dow ruling back in July? A couple of you. All right. So what the Dow was essentially doing was, it was an ICO, but they basically did the raise in a way in which they were forming a venture capital fund, right? They were going to be paying dividends to people. They were doing all sorts of stuff.
They should have talked to you before they launched.
Yes, they should have. I could have gotten a good chunk too. But that was an obvious mistake, right? What they were doing was very obviously a security. Even if they already had everything built out in that case, what was your name, sir? Charles. Even if they already had everything built out in that case, they were still a security because they were so blatantly in violation of everything else, right? So it's important. It's a test, right? There's factors, and Commissioner Clayton has sort of laid out what his view of things are, but we're still looking to sort of see where things go, right? The Munchies ruling back in December was much more illuminating, right, and much more dangerous. After the Dow ruling, clients were, I won't say I advise people of anything, but people were still going out and doing ICOs. It wasn't that dangerous, right? And even then, the Dow got a slap on the wrist, right? Munchies was almost like any other ICO. They had done a little bit of their due diligence. They had structured it in a way in which they thought they were not an ICO, but the SEC, or they were not a security, sorry, but the SEC still came in and said, no, sorry. And that was when I started seeing a dip in activity as well, because then no one knew what to expect.
So what was the main reason the SEC went after them? Like, what was like the one or two things that they really did wrong? I mean, because you gotta really do something wrong for the SEC to come and shut you down.
That was what was scarier about Munchie, and that is why I felt there was a drop.
They also had dividends, I believe.
They had to.
No dividends for Munchie.
Okay, I thought there was.
It's possible you're right. From what I remember, no dividends for Munchie. That was why they were scary, though. That was why Munchie was such a scary thing for ICOs within the U.S. And since then, you've seen exchanges dropping tokens. You've seen, a lot of cryptocurrencies sort of fall by the wayside, I think, because there's a lot more fear.
And I mean, I think you got to filter out the good with the bad, right?
Exactly.
So if you're,
Now, I'll go back to the different players that I mentioned before, right? You had exchanges, and then you had the token creators, right? If you say people like Munchie, like DAO, like Ethereum are the token creators, then you have Binance, Bittrex that are the exchanges, Coinbase, right? Currently, these exchanges are governed by FinCEN, right? As I mentioned, FinCEN has more of a regulatory purpose. That's why under certain laws you have to register as a money services business, not only federally, but then you might also have to do so state by state. It's a complicated process. These guys have been making enough money for it to be worth it, though. But they're limited to money services businesses as long as they're dealing with non-securities. Once you're dealing with a security, then you have to start looking at registering yourself as an actual exchange with the SEC or an alternative trading system. So that's why you've seen in the last several months a lot of these exchanges dropping cryptocurrencies, right? Because if these exchanges are actually dealing and allowing for exchanges in securities, then you're looking at a lot of trouble that they run into with the SEC, right? A lot of registration requirements.
Question.
Yes.
So based on what you just said, Coinbase would be more so under FinCEN right now. But if they were to accept a ERC20 token that is used on a business platform of sorts, then they would have to now register their Coinbase exchange under the SEC?
If that token was determined to be a security, not a utility.
Oh.
Right. Yes.
What's the difference between a utility and a...
So the Howey test sort of determines whether or not something is an investment contract. If you're an investment contract, you're a security, right? A cryptocurrency that isn't a security is generally considered a utility token. The concept behind utility tokens is, like I mentioned, these people doing ICOs, this is why sort of like a Kickstarter, they're saying, look, here's this token you can use on our platform, right? They're arguing this token has utility. It's not necessarily an investment asset only, it actually has utility, right? You buy Ether, you use it on Ethereum, that's why it's not like an investment contract, it's not a security. Does that make sense? As much as...
As much as, yeah, at this
All right.
point, but yeah.
Great.
What is Bitcoin?
Bitcoin is, so I'm not going to say this for sure, but Bitcoin is as close to a utility, well, not a utility token, really.
You can argue both sides, right?
No, so I would say it's hard to argue. Utility token you can't argue, right? What is Bitcoin's utility technically? It wasn't built out for a specific blockchain or system, was it? Right?
It was the first digital currency.
Right. Bitcoin, I would say, is a separate property.
That's why I think it's hard if you try to make it binary between security and utility. Because if you threw in there the currency, we're not using that to gain a goods or service from a platform, so it's not a utility. But a currency is not a security.
That's a very good point, but I would find it hard for you to hear something as well.
Yeah, I would just argue that Bitcoin is used as a store of value, right? It's not contested as a utility specifically, but Satoshi, when you initially created it, was specifically to replace the dollar as a store of value.
Right. Okay. And that's interesting, right? So then you have this whole class of Litecoin, Bitcoin, etc., that really doesn't fall into either. So it's not a binary, right? This is just when you're looking at the SEC's regulation. In that case, it's anything that's not a security. Well, okay, let's say it's not a security, right? It's a fair point. So I'll go through this, and I'll talk a little bit about the IRS. I'm sure some of you are interested about that. So how many of you here included cryptocurrency in your tax returns? Okay.
One of how many?
Now, a few things have been said, on that topic. How many of you included the token-to-token exchanges? Okay. Now.
But was that required?
So first of all, it's definitely required to be reported.
No, but are you paying a capital gain from a coin to coin?
That is.
I thought it was always.
Undetermined.
I thought it was always from fiat to coin.
No. So one thing to keep in mind here: property-to-property exchanges are always taxable, right? If I have a chair and I sell it to you for a table, that's a taxable exchange.
Or is it?
Yeah.
where we got jammed up there was people sort of made it up to say, oh, it's a 1031, it's a like kind. I'm a real estate guy, and I know the rules around a 1031 it's a pain in the rear end to do it within the legal status. So unless you're using a third party, you know, for, the hell's the word I'm looking for here? But I mean, unless you fit in, it never was a 1031. I don't think.
I used to agree with you, right? I don't have that much of a background in tax. So this is, you know, based on my limited knowledge. I have a partner in my firm who does taxes in tax law, and he's done a few cryptocurrency returns. The like-kind exchange, all those requirements are necessary when you're looking at something down the line, right? So generally, you don't have a direct exchange. I don't go, here's my gas station, or here's my house, here's your parcel of land, let's just do this, right? Generally, there's some time between the transactions. Part of what makes blockchain interesting is that the transaction, the settlement, everything is happening right there, right? There's an argument that like-kind exchanges apply there. It's uncertain, but guess what? It doesn't matter in any case going forward, because with the new tax law, like-kind exchanges are only limited to real property. So going forward, every time, you know, let's say I buy Bitcoin at $1,000, Bitcoin goes up to $10,000, and then I buy $10,000 worth of Ether. I have to recognize $9,000 of income, right? I have no cash in hand. I don't know how I'm going to pay those taxes, unless I'm in Nevada, apparently. But that's $9,000 of income that I have.
How about if the next one falls? How do you justify it, right? So I bought Bitcoin at 1,000. It went up to say 10,000. I have 9,000 capital gain, right? I bought Ripple at $3.40, and it's down to 40 cents.
Then you got to tally up and.
So are you doing the positive and then the negative?
If you actually have the disposition of the Ripple, then yes.
Okay.
Right? Otherwise,
Closed out that deal.
right, exactly.
Now if you're just holding it.
Exactly. If you're just holding it, then nothing, right? Same as if.
But you're
just
still
sold the stock.
holding it, right? The argument that I have with that is, how can you cause a capital gain to occur when the gain is not gained anymore? It fell, right?
The property is
Huh?
no longer, the value is lost on it. Unless you sell it within the same year, then you can't take it off on your taxes. I mean, I used to, same to you, I used to have rental property. Same thing, any loss that I had within that year, I could apply it. And actually, you know, I don't think you do any.
But on a rental property, you can amortize the property over 30 years,
Just
right?
because you've cut out the part.
So if you buy a stock for $1, sold it for 10, right? And then you buy another stock for $3.
But you bought another stock, and here you're trading one stock for
Just
another,
because
right?
you've cut out the part where you're exchanging to USD doesn't mean the transaction doesn't have the same
Yeah.
character.
Just it still recognize that
I agree.
money value.
You not book your profit losses, you not realize the profit losses.
Yeah.
I think the realization is the difference. You realize it before the interest of December, then you can the profits and the losses in the same
I agree.
year.
Before the year is up, if you sell it at a loss, you can.
Can you
So-
realize it?
But the mechanism is also much more modern than the law, right? So the idea of flipping one currency into another without having some intermediate step, right?
Yeah.
Like selling the stock into another is a really new idea. So that I'm sure the regulation will have to catch up to crypto
Absolutely.
eventually.
I ended up getting around that. I would flip it to Tether just for a second, so I had a benchmark, and then flip it to the other currency. Not so they would evaluate, but just so that it made it easier on my taxes.
So I got a suggestion from one of my tax consultants to actually move everything to Tether. Since you mentioned Tether, and keep it there for a year, and you know, realize long-term gains versus.
What's the
short-term.
cause behind Tether? Why is Tether the platform that I've seen? Like, why Tether?
Because of
As
what
opposed to
it's,
other stable coins?
Yeah.
Tether tends to be
Yeah.
at the dollar, right?
Yeah.
It tends to tether itself to a dollar. It's between 97 cents to $1.03.
Yeah.
The variation is limited. There used to be the SBD, the steam bank dollars,
Yeah.
which was with the same thought process
Yeah.
and inspiration, but now it's all over the place.
And that's also an important difference to keep in mind, right? Because it's property, you have long-term versus short-term capital gain. Now, to June's point earlier about the myriad of regulations, right? The myriad of regulators. What is this? Property, commodity, virtual currency, security, hopefully you started to see where these things separate, right? The property designation is for tax purposes, generally, right? When you're looking at the regulatory schemes you have to comply with as someone in the blockchain innovation space, then you start to look at, okay, do I fall into FinCEN's regulation? Do I fall under CFTC or the SEC, or maybe none of them, right? And that starts to get a little clearer. Generally, if you're not doing anything too out there, CFTC, you can kind of rule out. Again, besides for the default I mentioned. SEC is a little tougher to avoid, but if you properly structure your coin, you don't, you're not providing dividends or the like, you have a product out before you're going out to the public, you can maybe avoid the SEC as well, right? And FinCEN is also fairly simple. I would definitely check out, for those of you in the space, FinCEN's 2014 virtual currency guidance that's fairly clear, and they've had a few different rulings on mining companies, et cetera, that are really illuminating that, right? Going forward in the space, there's been some innovation. I see people looking at just intrastate offerings, so you only have to comply with the state level security laws. That's been one thing. And then a lot of tokens have been issued as securities. So just accept the fact, capital formation laws and SEC laws are flexible enough that they will allow you to go out and raise from accredited investors. And now there's enough accredited crypto investors out there as well, right? There's enough people in that space that have crossed the accredited investor threshold, so they're able to invest. That's just the US, yes.
I think another thing too is that a lot of companies are offering both security and utility tokens simultaneously, like one specifically for their platform and then one to specifically use to raise capital.
Right, exactly. And a lot of them, so in that same vein, they'll do equity raises first, and then once they have the equity, once they have something built out, then they'll launch their system and do an ICO, right? So there's ways to do this still. The US regulation is, I think, common sense to some extent. There's still a ways to go, but it's by no means like China completely shutting things off. Although I think China had very logical reasons to do that when it did because of the flight of some capital. So that's the US. There's international frameworks as well. Other countries are a lot more flexible. So we went over taxes. We went over money service businesses generally, right? Anyone have any specific questions there?
Just a point, because I had looked into this pretty carefully. If you're moving money for folks, or if you're buying money for folks, or if your business is local Bitcoins, or if your business is anything, you've got to register as an MSB by the rules with FinCEN. That's worth checking out.
And so do ATMs, right?
Yep.
Bitcoin ATMs?
Yep.
So
Absolutely.
Does that also apply for retailers? Like, let's say I'm a food truck, and I accept Bitcoin and crypto.
No.
Only
if
for
you're
the
selling,
platform, yeah.
If they're giving
You're
you cash for
providing
crypto.
services
Yeah.
or goods. So this is where mining pools and different things are also exempted. If you're providing services or goods and accepting currency, that's fine. Generally, if you're acting on behalf of a third party, as
If you're a back pocket
Talk
exchange
about
where you're hitting me up saying I need $10,000 and I'm doing it to you regularly, or I'm doing that for a business, then you, by the letter of the law, you've got to register.
Exactly. I'll go into, as Nabil asked, are there ways to do tokens, right? Tokens that are actually securities. How I actually originally got into blockchain was looking at tokenizing securities, right?
Yeah.
But it's very different when you're looking at that from the whole reason ICOs came up, right? When you're looking at ICOs, it's this rebellion, it's looking at problems with capital formation, people going after the public. But when you're looking at blockchain technology and its applications, then you start to see how it might affect the securities industry itself, right? There's a lot of synergies to take advantage of to put your security on a blockchain. What I would recommend you take a look at, so the first tokenized security, I believe, would have been Overstock's offering.
Yeah.
How many of you are familiar with T0? So they had an interesting back and forth with the SEC too, back in 2015, 16. I can't remember the exact date. But you know, they made arguments. Look, there's all these requirements in securities law of a transfer agent, of clearing and settlement, etc. Is this really needed? You know, in the end, they said, yeah, we're going to go ahead and comply, but we think blockchain technology makes a lot of this defined, right? Their whole concept, T0, was essentially, look, normally federal laws require T plus, at the time I think it was T plus 3,
Yeah.
right? Now it's T plus 2. So it actually takes 3 days, or now 2 days, for your transaction to settle. And there's no real reason for that, right? And hence the name T0.
So has any company nobody's done it successfully, right?
No,
Taken-
Overstock was successful.
No, meaning, I know what they did, but taking a digital currency, making a security, and then landing NASDAQ or, you know, New York Stock Exchange.
So I have seen, and I can't say the names of the companies, but I have seen applications going for this.
So it's being pursued, but nobody's done it successfully yet.
No one has gone from a virtual currency to a security yet to a public security, sorry. They're already securities, right?
Yeah.
But to a public security yet.
But can you take an existing digital currency, not an ICO? I'm already established, I'm on an exchange, and now I want to become a security. Can you do a transfer and go to NASDAQ or, you know, one of these?
Sure. So, number one, there's the question of what your contractual relationship is with the people you issue the
Yeah.
tokens. Right? That's important. Okay. But provided that allows for this, if you were to tweak some things in a token, there's no reason you couldn't make it into a security, right? If you have a utility token or a virtual currency, as Clark pointed out, this other category, that doesn't mean you can't change it to provide, for it to be tied into your company, for example, right? And then suddenly it's a security, then you can go to the NASDAQ. What people are saying, you know, so there's a few different ways to do what you're talking about. There's securities exchanges like the NASDAQ or the NYSE. Generally, to go to those, you have to go public, right? There is Reg A Plus or Reg A offerings, which are sort of the mini IPOs.
Yeah.
Some people are looking at taking advantage of that. It's questionable of what utility that is, but it is interesting. And then finally, there's a whole private securities, right? Non-public securities market. That's where these alternative trading systems come in that trade these private securities. And I think that is where there might be a little more room. There's restrictions on volume and et cetera for these alternative trading systems. But, you know, I think you'll start to see maybe certain exchanges, certain cryptocurrency exchanges now going in that direction.
Cool. Thank you very much. Hey, sorry I was a little late. I got stuck in traffic on the way here. I'm Nikhil Shenoy. I help Dan run this group. So it's a wonderful turnout tonight. I think, you know, hopefully everybody got something out of the regulation for crypto. So again, thanks Nabil as well.
Thank you. Thank you for having me, guys.
So Nabil has been wonderful with our group, and he's one of our first speakers as well before, and he's kind enough to speak again, so we'll see him again in the near term. I encourage you to check out the Cryptolitics blog online and follow him on every social media you can imagine. I do. So yeah, so if you have any suggestions for the group, I mean, you know, right now what we're doing this summer is a speaker series. We're confirmed in June and July. In June, we have Craig Fisher of Treasury speaking about their blockchain pilot, which should be really, really interesting, and it's a true government blockchain meeting.
That'll be interesting.
I hope so. And then in July, we have someone who's proclaimed himself the godfather of government contracting, Mark Hamtower. So anybody who's ever read the book Selling to the Government, he's the author of it. So he literally wrote the book about it, and he has a ton of experience selling, especially emerging technologies like cloud, and before that even internet services to the government, how the business kind of evolves over time, how to target, how to actually get government business. And then next month, we're working on nailing down the date in May, but we're going to have a couple speakers on energy. One of them is Chris Peoples, who's an experienced energy consultant. The other one is Doug Miller, who has an interesting use case. So if you have any ideas, or you want to speak, or know somebody who's interested in kind of presenting and using our platform, please email us, gbarustin@gmail.com, or on the Meetup app, you can reach out to me directly and Dan as well. Any questions or any suggestions? Yeah.
I thought you were going to talk tonight more about the blockchain as opposed to the
So, if 30 seconds?
Yeah, please.
Unfortunately, most of blockchain law right now is very focused on cryptocurrency. There are, applications, say the healthcare industry, looking at HIPAA,
But you got to follow the money, right? The money's in crypto.
Exactly.
Right?
There's also applications in, say, legal, accounting, etc. There's no such thing as blockchain law. Wow. How blockchain interacts with specific areas. I happen to focus on securities and look at the CFTC, etc., FinCEN, so that's what I know of. But it definitely applies to different areas. It's a matter of how you think blockchain technology is going to interact with the legal framework in whatever industry you're in.
It'd be kind of I'm sorry. It'd be kind of interesting to hear something on maybe something with your kind of experience where you talk about privacy laws, GDPR,
Yep.
for the Europe or something like that, because with the upcoming thing with quantum computing, which is real, and because like IBM has a play toy out there that you can go out there and do beta tests with quantum computing. If y'all don't know that, you can go out there and play with it. That is coming. So if you know anybody who's working in that area, what it means for that, because to your point with blockchain architecture, the fact is it's immutable, and somebody's data is always out there is a problem.
So a couple of things on that, right? So first of all, is your interest in international law? So a lot of what we talked about today is focused on U.S. only, right? GDPR is purely a European thing right now.
But the HIPAA,
coming, sorry.
PI,
It's coming. Yeah.
Look at Facebook, look what happened up in the hills last week.
Yeah, I mean, privacy laws or something, but that might, that's a huge topic, and blockchain and privacy laws could be an interesting thing. So if you know anybody who's an expert in that specific niche on privacy law, and they have to have some blockchain insights, please email us, and we'd love to hear from them. That's a great topic idea. I think the other thing that you touched on was quantum computing and IBM. So there are always new technologies out there with blockchain. There's something I heard about like disconnected graph theory or something, and hash graph is another thing that comes up. It feels like every day you hear about new protocols. So we've actually tried to stay away from protocol discussions here, just because you can get so caught up in the weeds that you tend to lose the audience. So we're looking for tangible topics and use cases, right? So things that people are either doing or considering, right? So in terms of like very theoretical discussions, now if there is a prototype that IBM's playing with, I think that might make a ton of sense to have somebody, if you know anybody who's played with it, and that's the other thing, right? Just because it's out there, I have a tough time meeting people who've actually done this stuff.
Well, you know that this past framework has on the blockchain game because they had which topics regarding security and cryptology, and that was one of the things that came up, and it was pointing out to that.
Very neat. Yeah, so I feel like I'm invited to spend $1,000 on the conference every other week.
Absolutely.
It all costs $1,000 no matter what. So if you find any of those insights, again, we don't charge you to join, and we don't pay our speakers a dime.
Absolutely.
So if you find anybody, and again, I met the next two speakers at those 4 pay conferences, and they're willing to speak to us, as a volunteer group doing it out of the kindness of our hearts during dinner time instead of being with our families. So it's a great venue. I think we have probably close to, I'm guessing, about 30 people here tonight. And it's wonderful that you guys made the time. And yeah.
Just a question. So since we're very closely marrying the relationship between government regulations and the blockchain technology, is there any kind of intention to kind of bring those two together and try to help bring regulators together here?
That's what GBA does.
That's what we're trying to do. There's actually a conference next week, May 1st and 2nd. I think the cost of admissions are around $895. Maybe it's $1,000. They're doing just exactly that. There was an ACTA conference a couple weeks ago that did the same thing. And the thing is really tough to get feds out and arrested. Really, really tough. I'm thrilled that we actually have Craig joining us in June. But if you know anybody who's willing to come talk to us about that, it doesn't have to be someone quite senior either. Anybody who's interested or is working on policy or that they're able to talk about. I think that's something that we really like. Now, is there any other activity besides speeches, you know? Yeah.
So I was just thinking that, for the benefit of the group, it'd be nice to understand what our specific interests are.
Yeah.
Yeah.
I,
so that
I think it's asked, right? I think you guys ask it when you register or when you when you set up for a meetup. I think that's one of the questions that you implemented.
Yeah, I hear what you're saying, because right now it's kind of a lecture series, right?
Right.
But, it'd be tough to do like a demo day or like a hackathon, things like that. It's not really the right forum for that, because we meet once a month for 2 or 3 hours. So, in that context, I think you're right. I think that there's an opportunity for that. Maybe we could have additional programming. So that's a good idea.
For 10 minutes, just to identify ourselves and what
Yeah.
aspect of the space we're in as we go around the room.
Yeah, so maybe what we'll do is, so I know that we have May, June, and July topics. So maybe August, the topic will be speed rounds. So everybody gets their 2 minutes of fame. Sign up with me and Dan, and you get to give your elevator speech for yourself, your company, your interest. Is that good? Would you guys all come to that in August?
Yep.
Yeah. Done. That's a good August topic is speed dating. All right. Thank you guys so much. Give yourselves a round of applause. Awesome.
Thank you for tuning in, guys. That's the end of the presentation. Thank you.